Rough a few months for Block. Shares of the mobile payment company fell sharply in August after an earnings call spooked investors with a forecasted sharp decline in profit growth. But one analyst saying that now is the time to buy the stock. Berenberg initiating coverage of Block yesterday with a buy rating. Price target of $75 a share. And we've got the analyst behind that call, Mark Palmer, Senior Equity Research Analyst at Berenberg, joining us here. And Mark, in your note, you write that the company has plenty of runway, and because of that, you're making the case to buy now. What's the catalyst here from this point for Block?
Well, first of all, thanks for having me. The real story behind Block has evolved from being one that was focused on top line growth and even gross profit growth into one that's really now about bottom line growth. Block has been growing at a rapid pace for a long time, but the profitability really hasn't been there. Now management has been pulling levers to reduce the growth of its expense base and thereby generate profitability, particularly as measured in adjusted operating income. And we believe that that's where there's a very long runway, is extending the profitability of the company, continuing to control expenses even while the top line continues to expand.
Is there an issue that Block faces from merchants and particularly where they have kind of tapped that market already and where some of the growth rates that they've seen among merchants have perhaps come into question among investors of whether or not they can put a point of sale device out there when everybody's saying, okay, well, my customers are just coming in and using Apple Pay, for instance, and there are other competitors that are now taking some of that market share, at least that mind share away.
It definitely is a competitive market. There's no question about that, particularly at the point of sale. Mm-hmm. But I think what differentiates Block is the fact that it has a suite of products which make it much stickier than a lot of the alternatives. You are seeing merchants that are using multiple products simultaneously to manage their payroll, to manage their cash flow, to take loans out from Block, to offer buy now, pay later so that they can enhance sales. That stickiness is really crucial because in a competitive market where there is a lot of churn, Block really does stand out. And so I think that element, which is going to become even stronger with Block rolling out more banking-oriented products, is something that is sometimes overlooked.
Hey, Mark, what do you think those banking products are going to look like? And you also mentioned one of the key investment reasons here, or points in this note, is Block's bank and how that separates it against many of its competitors in this space. What kind of a competitive edge does that give the company?
I think it's a huge edge for a couple of reasons. One is that you see a lot of fintech companies that are out there that are forced to go to third-party banks, so-called charters for hire or banking as a service platforms. Block doesn't have to do this. It has its own Utah Industrial Bank. It's FDIC insured, and so it doesn't have to share revenue on the banking products it sells. It doesn't have to pay fees in order to be able to offer those. That's a huge distinction, which will further enhance the company's profitability as that part of the business becomes bigger.
How much of the Block story is still NX to Bitcoin?
It's interesting because there is a significant correlation between the price of Block shares and the price of Bitcoin. It's about a 0.61 correlation according to our calculation. You don't see a tremendous amount of gross profit generated from the buying and selling of Bitcoin. The company's holdings of Bitcoin on its balance sheet are less than 1% of its total assets, but there's a perception that Block enables retail investors in particular to get access or exposure to Bitcoin without buying Bitcoin directly. And that's important right now because we do see a catalyst on the horizon, which is the so-called Bitcoin halving set to occur in April of 2024. In the first three halvings, and this is when the rewards that are paid to Bitcoin miners are cut in half, hence the supply of Bitcoin declines, which is conducive to a higher price. What we've seen is that the prior three halvings, the price of Bitcoin rallied before the halving and then afterward. We're heading into that zone right now.